Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
I'm Alix alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence analysts, because they cover 2,000 companies and 130 industries worldwide. And we're going to check in with one of them now on Goldman Sachs, sitting at a record high. And this was all thanks to the traditional old school Goldman Sachs business, FICC and equity trading, just crushing analyst estimates. For that, we want to go to Alison Williams, Bloomberg Intelligence Senior Analyst for global banks and asset managers. Alison, the highlights, and is it worth the record high on Goldman Sachs stock? That is hard. That is hard to say.
Well, as you know, we don't make stock calls, but I can tell you that the fundamentals are strong, and Goldman is really, showing that it made the right decision in the last couple of years to focus back on its core institutional businesses. Out of all the global banks, they have been the most focused on this business. They earn the most from trading, and they're definitely showing progress in different aspects of the business that they've focused on. So, for example, fixed income trading up 15 to 20%, doing a lot of financing assets in that business. Equity trading also up strong. The one area that was a little bit weak was the M&A fee side. They are typically the global leader in fees, but JP Morgan really sort of leapfrogging them this quarter. But the positive thing is that they talked about the investment banking fee pipeline increasing sequentially. That looks good for the third quarter. On the expense side of things, also showing some good cost control on the non-compensation expenses, but on the compensation expenses, the ratio there actually going up a little bit.
Interesting. Okay. Alison, what kind of returns do the Goldman Sachses of the world earn on their global trading businesses today? I know that, with coming out of the great financial crisis, lots of regulations, lots of limits. Where is Goldman and some of their big peers?
So certainly, the returns are not what they used to be, and it depends on the specific vertical. I think if you look at fixed income trading, it tends to have sort of a higher pre-tax margin, but the returns on equity tend to be lower because it's a little bit capital intensive. But for the bank overall, turning in double-digit returns, so I think showing a good return overall.
Do you think that Goldman Sachs has left behind it its Marcus fiasco, its push into consumer banking? Is that chapter officially closed?
That chapter is closed. Keep in mind that they are still focusing on gathering deposits, right? So what they've closed is, saying we're going to expand into all these businesses, incrementally add to something that they've never had a leadership position in, and sort of making an entry in a new market, changing the business model, if you will. Instead, they said they're going to go back to, focusing on what they're good at. They do have the transaction banking business, which is something that they've entered into recent years, but we think that business makes sense for them. I think it helps them to serve their corporate clients. And on the consumer side, stepping away from lending. So they still have a couple of lending products left, but I'm sure everyone has seen the headlines related to Apple and know that those are probably going away too. They're really just sticking to the deposit side of things as sort of diversification of funding.
So talk to us about their asset and wealth management business. I know it's about 30% of their revenue these days. What's their focus for that going forward?
That's a good question, Paul, and really highlights one of the areas of strength this quarter, which is, raising money in their alternatives business. This has been a strategy, several years ago, they embarked on shifting from the Goldman that we know for decades and decades of investing their own money, using that expertise to really invest more for clients and making those revenues sort of more of a fee-based revenue, management money for clients versus just the proprietary gains that they would get on those types of assets. And they are doing really well in terms of exceeding their targets for raising money there. And at the end of the day, that's sort of a better proposition to investors in the stock because investors generally tend to like to have more recurring revenue-based businesses and capital-light businesses.
Okay, so tomorrow we get Bank of America, which is currently at a 52-week high, and Morgan Stanley. How are they going to do knowing what we know from Citi, JP, and Goldman?
Sure. So a couple of different stories. I mean, the read-through is really positive for Morgan Stanley in terms of the institutional business, but certainly they need to jump over that higher bar because according to consensus right now, JP Morgan moving into the number 2 spot for equities trading revenue. Keep in mind that Morgan Stanley was number 1 for several years, Goldman's number 1 now, and JP Morgan moving up. But equities trading should be good, fees should be good. I think people will be watching on the wealth management side of things just due to some pricing changes that we saw at Wells. So I think that's what people are going to be watching there. Also the compensation ratio to see what's happening across the industry. Bank of America on net interest income, again, we had sort of that negative surprise from Wells Fargo related to their wealth management business. What are we going to hear from Bank of America with regard to that? We do expect that we'll see the same capital market strength. We're also wondering on the commercial loan side of things, disappointing loan balances hurt Wells Fargo. In the industry data, it looks like there was a little bit of a pickup in commercial balances at the end of the quarter. We don't know if that's just something funky with the data or if there might be more to it. So that's what we'll be looking to hear about from Bank of America.
All right, great stuff. As always, Alison Williams, she's a senior financials, banks, global, all that kind of stuff for Bloomberg Intelligence. She's been doing that for decades, first on the buy side at Morgan Stanley Investment Management, and then for the last close to 15 years with Bloomberg Intelligence. So good numbers coming out of Goldman Sachs.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm Alix Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news and analysis and business and economics through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries worldwide. We also follow all the news for you also outside of Bloomberg. And joining us now is Henrietta Treyz, Managing Partner and Director of Economic Policy. She joins us now. Okay, there is a lot to get through here. You cover all of this for Veda Partners. There's a lot to cherry pick from, but let's go to the breaking headline here. According to Fox News, and this was according to a post on X, President Trump will be making his vice president announcement today. Who do you think that's going to be?
Well, I think the base case should be J.D. Vance. Ohio is obviously a pretty safe red state right now, but I think the two of them have a mutually compatible outlook. It really suits the theme of his campaign, which is a very sort of robust, sort of aggressive America First campaign. The speculation, obviously, and the real exciting component would be if he were to choose Nikki Haley, coming off of a 22% win in Indiana in the primaries just a couple weeks ago. She has shown that she has a real lock on a totally different demographic that Trump has struggled with for many years, and specifically in the last couple of months, which is the female demographic, specifically suburban, married, educated women. That would make his potential path to an electoral college win on par with Obama's in 2008 a real possibility.
So, Henrietta, on the VP pick, when do you think we're going to hear it? Who could it possibly be? Because that seems to be maybe at the top of the agenda here today.
Right. Yeah. So my understanding is it could happen as early as tonight, but I've seen quite a bit of speculation and rules changes within the RNC delegation and their committees that it could be as late as Wednesday. So while I recognize that the Trump team is saying that it could be tonight, I wouldn't be surprised if there were some fastballs thrown in here at the last minute. But my base case expectation is for J.D. Vance, and I'd be pretty alarmed and surprised if it were Nikki Haley. The difference between the two campaigns and internally within the Trump campaign, I think, is probably insurmountable, but it would be a very rational sort of strategic move for Trump to move to the middle and try to say, this really is a unity ticket. Let me show you how, and put Nikki Haley on the top.
If we go to J.D. Vance for a moment, what was striking, though, is how he really came out and was blaming Democrats for the assassination attempt on President Trump. What we've heard so far from former President Trump is more of a message of unity. Do you think that the unity message prevails here on the ticket, or do you think that the fracturing prevails on the ticket?
I think fracturing is where Trump feels most comfortable. I think he likes being, sort of the aggressor, and a unity ticket is not in keeping with anything we've seen from the Trump campaign since 2016. So I'd be pretty surprised if it were Nikki Haley. Again, I do think that makes the most political sense for him, just in terms of trying to win the Electoral College and winning the popular vote as well, which could be massively helpful to him in 2025 as Republicans try to pass a $4.6 trillion tax bill. So there is a lot of strategic benefit to choosing a Nikki Haley. I don't know if it's compatible with his actual campaign, though, and my default is going to be a JD Vance style candidate. Marco Rubio is another one I'd put up there in roughly the same category.
So, Henrietta, what do you think, or let's put it this way, do you think the message from former President Trump and his campaign, will it change at all given the events of Saturday?
I think the agenda of the campaign and the campaign in general needs to just get through the next couple of months. We are, in the very early days in July. I mean, this should be something that we are expecting as a shakeup in October, and it's only July. We've had two massive shakeups in just the last week, with the disastrous presidential debate for Joe Biden and the dramatic rise we've seen in calls for Biden to get off the ticket, and then an assassination attempt. So from my seat, there's a lot of whiplash, and we still have 4 months to go till actual election day.
Part of the Biden campaign has truly been talking about how President Trump will fracture democracy and what a big risk is. Do you think the Biden campaign can continue with that now? They've already pulled some campaign ads. How does that narrative evolve?
No, I don't think that that's going to hold. The idea of staying as a unity ticket, suspending campaign donations, suspending fundraising, suspending ads, that's all going to wrap up, I think, in the next couple of hours. You're already seeing some policy papers come out from the White House. There was one released just moments ago on the impact of Trump's potential tariffs and replacing the federal income tax with tariffs, which would drive tariffs up. It would have to be 70% or higher in order to compensate for the lost revenue to Treasury if they were to abolish the federal income tax. So there's stuff percolating behind the scenes. And then let's be mindful that the Biden team is really trying to beat back the base of the Democratic Party that's hoping he will step aside. So a whole bunch of things went in Biden's favor, ironically, since the shooting. And it is really just that it has taken Democratic concerns about his ability to run for another 4 years off the table. I think that's only temporary. In the background, you still have calls from members of the DNC and from donors to either suspend donations, not continue contributing to the campaign, and to move forward with something akin to a mini primary in late July. So all that is percolating in the background, and I think Biden's going to have to go out in force. The one area he really succeeds in beating Republican messaging on, aside from things along the lines of abortion, is really who has the better state of play with regards to maintaining democracy. He pulls ahead of Trump by 7 points there. We'll really want to watch and see how that plays with voters in the wake of Saturday's shooting.
So when do you think the Democrats will make any kind of moves as it relates to their candidate, if at all, here? Is this something that they have to just see how the recent news of the failed assassination, how that plays out in the public's mind, maybe get some polling? What's the timing there, do you think?
Yeah, and because we had a tremendous amount of polling. I mean, everybody was interested in seeing how Biden and Trump would fare in the wake of the disastrous debate and in the uproar about Democrats potentially replacing Biden. That has all taken a backseat. I don't think it's going to go away, though. And there are, I think, the view in the Democratic Party with everybody that's not, Team Biden is really that Republicans are on a trajectory to win right now. And if Biden stays at the top of the ticket, Democrats could get wiped out in the House and the Senate and give Republicans not just a statistical majority, but a mandate level majority, 55, 56, 57 seats in the Senate. So I think there's a tremendous amount of focus in the background of getting Biden to step aside. 60% or more of Democratic voters want someone else at the top of the ticket. They're going to need to shake things up. I don't think that that's going to go away.
About 30, 40 seconds left. The Trump trade is in full effect right now in the market. Is that legit for the long term?
Absolutely. I mean, at this point, the Democrats have a candidate that 62% of Democrats would prefer were not on the ballot. In that scenario, coupled with the resurgence and massive galvanization of Trump voters, you really need to have another shakeup at the Democratic front in order for this not to be a Republican win election. The two are neck and neck nationally, but Trump leads by 4 or 5 points in most of the swing states. And that's how you get elected in the Electoral College.
All right, Henrietta, thank you so much. We do appreciate you. I know it's been a busy 72 hours for you. Henrietta Treyz, Managing Partner and Director of Economic Policy over at Veda Partners.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. There are two very interesting things evolving in the market. One is earnings and what do we do with a value trade? What do we do with small caps? And the other is the Trump trade effect, that if Trump wins the presidency after the events over the weekend, what that winds up looking like for the market. So there's lots of different stuff to dissect. So we want to go to Shana Sissel, President and CEO of Banríon Capital Management. She joins us from Chicago, Illinois. Shana, let's start off with the events over the weekend, the attempted assassination attempt to President Trump. There is a Trump trade in the market. Do you buy it? Like, is it real? I mean, typically, if you wind up trading stocks around who you think is going to be the president, that actually hasn't really paid off for you.
Well, I do think the Trump trade is real. I do think it's warranted. I think the events of the weekend actually bolster former President Trump's already the lead that he has. I think just, if you look across social media, a lot of folks who were not really Trump fans saw the events of this weekend as a reason to vote for him. In a way, that photo that came out is going to be iconic, and people saw it as like America and look at the way he handled this. And I think all of those things play into market sentiment, and you're seeing that in the Trump trade.
All right, Shana, let's maybe step back from that. Kind of prior to this weekend, what was your market call, and has anything changed?
My market call was that we're in a period of slowing economic growth, that the Fed rate hikes have done their job in many respects. We're clearly seeing the economy slow. The Fed has made it clear that there's a likelihood that there will be a rate cut in September. And I don't think any of that has changed, in my opinion. I think we still have a slowing economic conditions, and we still have high probability that the Fed will make its first cut in September.
So the headline to that over the last 3 trading days has been buy small caps. Do you buy that?
Mm-hmm. Not necessarily. I'm very encouraged by the small cap rally. Small caps have done horribly for like 2 years and behaved in a way that we don't really have any like historical reference point for. Typically, small caps behave in a certain way technically, and they hadn't been doing that. So I'm encouraged by the small cap rally. We'd had a very long period of time where small caps did not make a new high, something like almost 2 years, I think. And so that is something I think is, a good thing, but I don't necessarily think small caps benefit in the current market environment for a number of reasons. Higher rates is just harder for them to tap into the capital markets. They're not necessarily the biggest beneficiaries of the hottest trends that are pushing earnings and growth, like AI. And so for those reasons, I'm still cautious on small caps.
Conversely, how do you think about those magnificent 6 or 7 stocks which have been, such a driver of this market, accounting for, the large majority of performance?
So one of the things that you can see in the market right now is we're seeing some dispersion of returns, starting to see greater participation across the S&P 500 outside of the Magnificent Seven, which is very positive. It's good for active managers. We touched on small caps. Active management in small cap has done absolutely phenomenal. And that's a perfect example of, why active management can work in certain areas of the market. And I think we're starting to see that a little bit outside of small caps and in large caps as we start to see the Mag 7 kind of take a breather. I think there's lots of other opportunities in the market to benefit from some of the hottest trends that people just aren't paying attention to.
So tell us, you have some nice stock picks here. Give us your top pick right now.
So I really like VRT. That's a second derivative player of the AI trade. So they do cooling systems for data centers. It's absolutely critical as we need more computing power for anything that is machine learning and artificial intelligence related. And they are the leading player with the top solutions when it comes to cooling, because a lot of computing power gets really hot and you certainly do not want things to overheat. So that's probably my favorite stock right now. It's the second derivative play of AI. And then I wanted to look outside of technology. Everybody kind of knows me as the NVIDIA girl, and there's other places in the market. So Novartis is a healthcare name. Healthcare has not done great this year, but this is an opportunity to get in with a player that is doing some really cutting edge things in oncology in particular. And then I have Apple on my list. I just said, let's think outside of tech, and now I'm going to throw Apple at you. But that's a stock that hasn't participated as much as some of the others. We've seen a rally recently, but the stock is trading at, a reasonable valuation and has some really interesting opportunities going forward.
Hey, Shana, what do we know about this AI tech spending? We hear about it, from all sorts of companies. And I guess one of the questions I have is, how much of this AI spending is incremental versus maybe just shuffled from another tech budget, whether it's information technology or something like that? What do we know about that?
Well, I would argue that AI should be part of your information technology budget because that's where it sits. I think that it is incremental, though. I do think companies realize that they need to have both the infrastructure for traditional IT and then have to really be thinking long-term as it pertains to how these things can improve business efficiencies. I know at Banríon, we're finding ways to incorporate AI in our tools and the way that we do our business as well. We use AI to help us with due diligence, and we use AI to help our clients use our technology. So I think everybody should be thinking about it, because not only does it improve the user experience and improve business efficiencies, but it can save you money in the long run.
But also, one company that you have here on your list is AerCap Holdings. It's the world's largest aircraft leasing firm, if you're just looking at by fleet value. It also just hit a 52-week high just a couple days ago. I think it's actually all-time high, really. Why do you like this company in this particular environment?
Well, we have the Boeing fiasco, which I think kind of makes people look for other areas where they can be taking advantage of, kind of the shortfall of Boeing. But it's also a really well-managed company trading at a massive discount to the market. So those two things, more than anything, are the reason why I like the stock. But, you can't overlook sort of market trends. I think you could argue that the Boeing situation doesn't necessarily affect them directly. But any kind of headline that would make people think about how airlines and fleets are managed, I think, is beneficial to AerCap.
Shana, I know in your career you've spent a lot of time on alternatives investing. What's the alternative that you think is most interesting these days that you're talking to your clients the most about?
Oh, man. So one of the things that has been coming up a lot lately is sports rights. It's one of my favorite topics because I think everybody out there can kind of connect with it. And we talk a lot about having advisors use alternatives as a way to connect with their target market of the types of clients that they want. And I think sports is, universally one of the ways to do that. And sports rights is becoming more and more common. I know Avenue Capital is launching a sports rights fund, and there are others like Kaz Investments that have these accredited investor only, and I just want to preface that, opportunities in sports, but I'm seeing it more and more. And I think that's a really interesting play right now, as you see, the Boston Celtics are being sold, and the multiple that they will get for that is going to be huge. And those opportunities are things that people pay attention to and connect with.
Hey, Shana, we really appreciate it. Thank you so much. Shana Sissel, President and CEO at Banríon Capital Market. So is that like everyone can get involved in sports rights?
I think if there's certain funds I think that will invest, and you can be an investor in those funds. But again, I think as Shana was saying, the valuations they just continue to go up and up and up. And some people thought there might be a top with the struggles of some of these traditional media companies and the amounts they can pay for broadcast rights, but. For every one of those media companies that's struggling, there's a technology company that's doing really well. And so whether it's, you can find these games on YouTube and Amazon Prime and all these other types of things.
And do the sports leagues makes the same?
What's
Whether
that?
Or not like
Yes.
Netflix is paying them versus like CBS? It's the same
Whoever
kind of
writes
money?
The check, yeah. And the check,
Interesting.
the rights go right to the athletes in addition to the owners of the teams and everything like that.
Do I need to know anything about sports to be able to invest in sports?
No.
Hey, there we go.
There you go. Exactly. Right. So the money keeps going up, it seems like.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's move over to the world of financial stocks here. Goldman Sachs, they had some numbers came out today, a little bit better than expected. We're going to break them down later with Alison Williams from Bloomberg Intelligence. Also, interesting story out of BlackRock. It's just extraordinary how big they are. $10.6 trillion assets. And they're citing ETF as a big reason here. Neil Sipes joins us, financials analyst for Bloomberg Intelligence, joins us here in studio. Neil, talk to us about BlackRock. It's obviously a monster financial institution, but I think it's probably the biggest financial institution people don't know about.
Yeah.
What's the news today on BlackRock?
I think obviously over the past 18 months, banks have been much more in the focus. Asset managers, maybe a little bit of a sleepier name, so to speak. But like you said, BlackRock eclipsing $10.5 trillion. Of course, a lot of that is due to markets. We're up 15, 20% so far year to date. But BlackRock, sort of that perennial grower in the industry where organic growth, those flows from institutional retail clients have been harder to come by. BlackRock, having that breadth and diversity of the platform, has really been able to deliver growth through varying market cycles. We think that's one of their strengths and why they're the leader in the space in terms of size. In terms of the second quarter, organic growth a little bit lighter than expected. Part of that due to the fact that we saw some larger institutional clients sort of rebalancing portfolios. That's just sort of natural in the business, especially when you're at all-time highs. Nonetheless, margin really improved. Again, that's on the heels of stronger markets. Most of the revenue here is asset-based fees. So as markets move higher, the top line expands as well. And so really, you highlighted the last thing, I guess, ETFs, another strong suit that's really the bread and butter of BlackRock. Again, and obviously now with some of that private markets push that we've seen in the past couple months.
When do they hit the law of large numbers thing?
Yeah, I think that is becoming the more popular question for
BlackRock. But I could ask this question forever, right? And they still do it.
Yeah, and they continue to target this 5% organic base fee growth figure. They've been lagging that over the past couple of quarters. Obviously, markets, since the beginning of 2022 were less conducive. They've been more conducive for the past 3 quarters or so. But the question still remains, how do you continue to grow at that 5% clip when you're talking about a $10 trillion asset base? And we think BlackRock's diversity, when assets are in motion, they can continue to garner share from less diversified, less price-worthy competitors.
Stock hasn't done anything this year, kind of up 1% just on the year, lagging the market. What's the investment call here on BlackRock? What are the investors saying? Yeah,
so I think, a lot of what's been baked into this year is sort of market growth, which is going to be a benefit to all asset managers in the space. So I think the skepticism of, are these gains lasting? What happens, obviously, in November when we get this eventual Fed pivot to cuts? How is that going to impact, client allocations? How is that going to impact the business model? But we do think BlackRock is, is positioned to benefit in pretty much all market cycles. And a lot of that long-term story is now shifting into that private markets focus with Preqin acquisition just announced a couple weeks ago and Global Infrastructure Partners in January.
Can I ask a really dumb question? At this point, who are BlackRock's actual competitors? Like, who can actually compete with this company?
Yeah, so there are plenty of competitors. I mean, asset management can be somewhat commoditized in a lot of spaces. There's competitors like a Vanguard. There's competitors like a Schwab, Invesco, Franklin, T. Rowe Price. There's plenty of names out there. The question is who's able to compete on price with BlackRock, and that's where scale really becomes paramount here, because they can continue to innovate with new products. If a new competitor comes out with, a new flashy product, BlackRock tends to match that and can sometimes beat it on price. And we know that BlackRock is entrenched with pretty much every institutional client, every retail client, so to speak, and that really gives them the strength of distribution to kind of leverage across its platform.
All right. Really good stuff. Thank you so much. Really appreciate it. And all of your insight, Neil Sipes, Bloomberg Intelligence Financials Analyst. The numbers are so big, it's like hard to comprehend.
I know. It's
like how big this company actually is.
Yeah. And it's across the board, all asset classes.
Yeah.
Here. So the ETFs being a new source of assets there. And it kind of begs the question, like I grew up with the mutual fund business, the Fidelities, the T. Rowe Prices. It just seems like all the money's going to ETFs, and even the mutual funds are converting to ETFs. So that seems to be the wrapper of choice.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Alix Steele and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcasts. A lot of things that this market's trying to digest right here. And most recently, the domestic politics, the Fed assassination attempt of former President Trump. We've got global geopolitics still out there. We've got earnings. We're right smack in the middle of earnings season, and then we've got the ever-present Fed watch. What is an investor to do? Let's check in with a professional. Sylvia Jablonski, Chief Executive Officer and Chief Investment Officer at Defiance ETFs, joins us here. Sylvia, we come into the markets here on a Monday morning. Another key issue out there in terms of domestic politics, what it means for these markets. How did you layer in what we learned over the weekend to what was already a challenging process for investors?
Good morning. Great to be here with you today. Well, I think this weekend was a shock to many, and I think it's somewhat unsurprising that the market is rallying today off of what happened. I think that there's some sentiment in the market that perhaps this turns out to be a Republican favored win, and if that's the case, if you think about kind of like big corporations and things that benefit from them or benefit them, things like policies for lower taxes and less kind of regulation, more M&A activity. This tends to be positive for some of the Mag 7 types of firms and things like this. But I think the other side of it, though, is I do think that we need to be a little bit cautious and see what happens in the market in coming days. The other way that this could have gone is that, we could have seen a lot of volatility in the markets, which I did and will expect to see in coming months if the election kind of goes back to he said, she said, he did, he didn't do, versus let's unite. I think if it's kind of a united front type of election, you get more stability in the markets. If you don't, you're going to see a lot of that volatility, and it'll be interesting to see at that point where asset allocations go.
It is really interesting to see the VIX curve, for example. Like, it hasn't really moved upwards. Like, we do get that spike in the VIX if you look at your function CCRV right around the election, but it hasn't really re-rated in the last couple days. Sylvia, the other thing that feels irrespective of what's happening in D.C. is this massive Russell 2000 rally. Multiple choice question. Is it short covering?
Yeah.
Do you fade it or do you buy it?
I think that there's an argument here to buy Russell, to start dipping into small caps, just for the sake of the fact that the Fed is very likely to start cutting. The data is arguably more favorable than not in terms of inflation going down. We've heard Fed Chair Powell talk about it. We've heard a lot of the Fed, governors come on and talk about, their views that we're finally going in the right direction. They need more data and things like this, but overall rates coming down is probably going to be good for small caps. It could be some short covering, but that also comes because of the fact that, rate cuts are likely to come forward. So I do think that you're going to see some of that diversification into areas of the market that haven't performed as well as the Mag 7. So that's also the natural inclination, I think, of longer term investors. You have these huge gains on some of the large cap names. Maybe you hang out with those, but you put some of your extra cash to work in places like small caps. And then I would argue, after this weekend, Bitcoin, right, we see the rally there. Digital assets and crypto had a good fall, good pullback, good dip to buy on. And so that might be part of the diversification trade too.
Sylvia, we're just kind of getting into the teeth of this earnings cycle here. What are you looking for this time around?
I'm looking for the same thing I was last time around. Overall, it would certainly be good to see that 10% growth that's estimated out there for S&P 500 earnings growth. But the truth is, I think we're all going to be looking for Mag 7. What is NVIDIA going to do, or will they continue to do what they've been doing all along? What will Apple look like with some of the positive news we've seen about demand picking up? Will those 7 hang tight and continue leading? And I think that's what a lot of what the market wants to continue to see this year. What would be healthier for the market is if we saw broad diversification in earnings growth and broad participation across the market. But I think that overall sentiment right now is still really heavily linked to the Mag 7.
Going back to the Bitcoin comment that you said, I don't get the Bitcoin trade with President Trump. Like, go ahead and buy Bitcoin, sure. Like, safety trade, okay, fine. Like, gold's at a record high or near a record high, why not? But what's the specific link to President Trump here?
Well, he's crypto friendly, right? He's thought to be crypto friendly anyway. In recent times, he's been, a little bit more favorable, or at least less doubtful about the viability of crypto as an asset. And so, I think that there's this idea that because he's a potentially crypto favorable president, that policies will kind of support or at least not diminish the growth of crypto. And that being said, I think, MicroStrategy is actually one of my buys too. I think, with crypto falling as much as it has because of the split, because of the, German government offloading positions, you have a real good dip there. And that's part of the rally too. But notably, crypto rose over the weekend. So you have to think that there's a link, due to his kind of favorable opinion about digital currency investing.
Yeah. Well, I also have to wonder, Paul, too, if it's just a deregulation environment for sure. Deregulation all the way if President Trump wins. We've already seen that with the courts.
Right, exactly. So, Sylvia, valuation here. Boy, if I look at valuation, just the surface for the S&P 500, it feels maybe not frothy, but certainly expensive. Now, some folks say, well, hey, pull out the handful of stocks that are really driving that, and the market's not that expensive. How do you kind of pursue that?
Yeah, I agree with that latter comment. Pull out some of the top names, and actually it doesn't look so frothy. But I would even argue that even for some of the top names out there, if you look at companies like NVIDIA, for example, that have just skyrocketed in terms of stock performance, they're certainly justifying their valuation, right? I mean, earnings have been positive. A lot of these corporations have cut massive spending and costs over the last couple of years. They're running leaner and meaner. They're more efficient. Or top and bottom line earnings are coming in. The valuations for now, to me, have been justified, and they wouldn't keep me from investing in these stocks going forward. Particularly when you get market pullbacks. When you get a couple of days ago, Nasdaq fell over 2%. Things like that. I mean, those are good times to enter into the market, particularly if you're a longer term shareholder. I'm not opposed to getting in, but there are opportunities outside of the Mag 7, the companies that do have the higher valuations too. So when you hear things like small cap rallying, and also, other parts of the AI trade, like energy and uranium, copper, things like this, there are other areas of the market to participate in what the Mag 7 are doing.
Well, it's interesting, we talk about a rotation though, right? Like out of growth into value, but both are moving. Like you have growth, the Mag 7, you have the NASDAQ 100, the S&P, and you also have the Russell. Can you have all these things at once? Like what does this tell us about where we are?
Well, that tells us, in my mind, that tells us that, we're in a soft landing, and that, the market is a good place to be. And so for all of the investors that have, that $6 trillion of cash that they're sitting on in their 4 to 5%, different fixed income types of products, money markets, treasuries, things like this. When you have an S&P 500 and a NASDAQ that are returning double digits, and we do have this sense of a soft landing, we have rates coming down, election years tend to be favorable for stocks, I think you're going to see participation across the markets. There will be those who favor momentum in the Mag 7, and there will be those who strategically diversify and have wider market breadth exposure. And I think that both of those things are happening because we are seeing that inflation coming down, that soft landing, and that's what markets want, and that's the sweet spot right now. Not to say that volatility isn't going to come our way, but I do think that at this moment we're in that soft landing sweet spot.
All right, Sylvia, thank you so much for joining us. Sylvia Jablonski, Chief Executive Officer and Chief Investment Officer at Defiance ETFs.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.